Get ready for the action, because we are diving straight into the market movers. Zürcher Kantonalbank Zurich Kantonalbank has just reduced its position in Alphabet Inc. stock by 2.4% in the fourth quarter, revealing significant shifts in institutional holdings. We break down exactly how this move impacts the landscape of GOOGL and what it signals for the tech giant. This is the first story you need to know about today.
Stop using your finger for notes, sketches, and edits. This Jam Jake stylus pen gives your iPad a smoother, more precise writing feel with palm rejection so your hand can rest naturally on the screen. It charges fast, works for hours, and comes with replacement tips. Perfect for school, work, or creative projects. Check the link in the comments to grab it on Amazon.
Next up, we look at Vision Capital Management Inc. and their recent action with Alphabet Inc. They cut their stake by 3.6% during the fourth quarter, making Alphabet their fifth biggest holding. We'll explore the details of this adjustment and see how it stacks up against other major investors who are actively reshaping their positions in this massive company. Stay tuned for the full breakdown. Now it's time for the big picture. Watch as institutions boost Alphabet shares. We are tracking the incredible surge of GOOGL stock, which is up nearly 8,000% since 2005, driven by massive institutional support and strong earnings growth. Find out what big money is doing and why this technology juggernaut is attracting such intense buying interest right now. Finally, we look at the predictions shaping the future. Alphabet and Meta stock predictions show strong support amid massive cloud growth, with market pricing suggesting a 100% yes for Alphabet's April target. We'll also cover the geopolitical factors influencing Meta's plans and what this means for the entire tech sector. Don't miss out. Stay with us for the rest of the news. Alphabet Inc. stock, trading under the ticker GOOGL, saw various institutional and insider activity recently, set against a backdrop of strong recent earnings. Zürcher Kantonalbank Zurich Kantonalbank reduced its position in Alphabet by 2.4% in the fourth quarter, selling 102,598 shares, leaving the fund with 4,124,434 shares, which represents about 2.8% of its total holdings and the sixth largest position. Other institutional investors have also adjusted their stakes. Brighton Jones LLC increased its holding by 3.9%, while Revolve Wealth Partners LLC raised its stake by 3.5%. Significant increases were also noted from Matrix Asset Advisors Inc., NY, which boosted its holdings by 17.6% in the second quarter, and Sequoia Financial Advisors LLC, which saw an 11.2% rise in its stake during the second quarter. United Bank also increased its position by 6.9% in the second quarter. Collectively, hedge funds and other institutional investors control approximately 40.03% of GOOGL stock. Insider trading activity has also been reported. Insider John Kent Walker sold 8,993 shares on March 27th, resulting in a 14.79% decrease in his ownership. Furthermore, CEO Sundar Pichai sold 32,500 shares on March 18th, leading to a 1.94% reduction in his ownership. Over the last quarter, insiders collectively sold 158,553 shares valued nearly $48 million, indicating an 11.61% insider ownership level. Financially, Alphabet demonstrated robust performance, reporting $5.11 earnings per share for the recent quarter, surpassing analyst consensus estimates of $2.64 by $2.47. Revenue reached $109.9 billion, beating the consensus of $106.98 billion, accompanied by a strong net margin of 37.92% and a return on equity of 38.99%. Looking ahead, the company announced a quarterly dividend of 22 cents per share, set to be paid on June 15th, an increase from the previous 21 cents, which translates to an annualized dividend of 88 cents. Analyst sentiment remains mixed but generally positive. Bank of America upgraded its target price to $430 with a buy rating, while HSBC raised its target from $385 to $435 and maintained a buy rating. Other reports include UBS setting a $410 target with a neutral rating, and Royal Bank of Canada giving an outperform rating with a $425 target. Overall, 2 analysts rate the stock as a strong buy, while 47 analysts have issued a buy rating. The consensus rating from Channel YouTube is currently moderate buy, with an average price target of $405.94. Alphabet, the holding company for Google and its diverse portfolio, spanning consumer products like search and YouTube, advertising platforms, and enterprise offerings through Google Cloud, is valued at a market capitalization of $4.7 trillion. The stock recently opened at $388.46, sitting between its one-year low of $147.84 and one-year high of $392.82. The firm's trading metrics include a 50-day simple moving average of $315.19 and a 200-day simple moving average of $309.67. The company maintains a current ratio and quick ratio of 1.92 and a low debt-to-equity ratio of 0.16. Alphabet Inc. stock, ticker GOOGL, saw shifts in institutional ownership and received mixed signals from research analysts amid strong recent earnings. Vision Capital Management Inc. reduced its stake in Alphabet by 3.6% in the fourth quarter, selling 4,517 shares, leaving the fund with 120,506 shares, making Alphabet its 5th largest holding. Other institutional activity has been notable. Brighton Jones LLC increased its position by 3.9%, while Revolve Wealth Partners LLC grew its stake by 3.5%. Significant gains were also reported by Matrix Asset Advisors Inc., NY, which increased holdings by 17.6% in the second quarter, and Sequoia Financial Advisors LLC, which saw an 11.2% increase. United Bank also raised its position by 6.9% during the second quarter. Collectively, hedge funds and institutional investors now control approximately 40.03% of Alphabet's stock. In the investment landscape, research coverage on GOOGL has been active. Several firms have adjusted their price targets and ratings. Bank of America upgraded its target price from $370 to $430 and issued a buy rating. Pivotal Research raised its target from $400 to $420 with a buy rating. Mizuho lifted its objective to $420 and assigned an outperform rating. Stifel Nicolaus set a $420 target and maintained a buy rating, although Freedom Capital downgraded the stock from strong buy to hold. Overall, the consensus rating from analysts is currently a moderate buy, with an average target price of $405.94. Financially, Alphabet delivered strong results, posting $5.11 earnings per share, EPS, for the quarter, significantly surpassing analysts' consensus estimates of $2.64 by $2.47. Revenue reached $109.9 billion, exceeding estimates of $106.98 billion, supported by a strong net margin of 37.92% and a return on equity of 38.99%. The company also announced a quarterly dividend of 22 cents per share, payable on June 15th, representing a positive adjustment from the previous quarter's payout. Market data shows Alphabet trading at $388.46 on Wednesday, with a market capitalization of $4.7 trillion. The stock exhibits a price-to-earnings ratio of 29.63 and a PEG ratio of 1.71. Insider activity also registered, with CAO Amy Thuner O'Toole selling 617 shares in April, and insider John Kent Walker selling 8,993 shares in March. Insiders collectively own 11.61% of the company's stock. Alphabet's business structure centers on Google, which encompasses consumer products like search and YouTube, advertising platforms, and hardware, alongside enterprise offerings through Google Cloud. The company is set to pay its next dividend on June 15th. Alphabet Inc., the parent company of Google, is experiencing significant investor interest, with its shares soaring 7,907% since its first notable inflow in 2005. This surge is underpinned by the company's dominant position in key technology sectors, including search, advertising, cloud computing, video, and artificial intelligence, further bolstered by investments in new tensor processing unit chips for AI workloads. Recent financial results highlight strong performance. In its first quarter fiscal 2026 earnings report, Alphabet reported consolidated revenue of $109.9 billion, marking a 22% year-over-year increase, and operating income reached $39.7 billion, up 30%. Per-share earnings also rose substantially by 82% to $5.11. These strong fundamentals are driving institutional investment. Data from money flows indicates heavy betting from large investors, with institutional volumes revealing strong demand for GOOGL over the past year. Proprietary inflow signals show unusually large trading volumes, suggesting strong institutional support. Analysts note that the company possesses a powerful fundamental story, combining strong sales and earnings growth with consistent financial performance. Furthermore, estimates suggest that earnings per share (EPS) is projected to increase by 5.2% this year. This combination of robust fundamentals and institutional buying interest has positioned Alphabet as a compelling investment. Tracking unusual trading volumes confirms the power of big money demand, a trait seen in top-performing outlier stocks. Given the historical price appreciation and solid fundamentals, Alphabet is being viewed as a cornerstone holding for sophisticated investors. The consistent flow of institutional buying signals that this stock warrants further investigation for diversified portfolios. Alphabet and Meta stock predictions are showing strong support, driven primarily by robust cloud growth within the technology sector. Market pricing indicates a 100% yes probability for Google's April target of $310, while Meta platform stock predictions also reflect a 100% yes for reaching $740 during the week of April 27. This positive sentiment is largely attributed to Alphabet's consistent 35% year-over-year cloud growth, which is bolstering investor confidence. Furthermore, Meta's increased capital expenditure guidance, partly influenced by geopolitical factors such as internet disruptions in Iran, is providing moderate support for positive market sentiment. Financial performance across the major tech players remains strong, with Amazon, Alphabet, Microsoft, and Meta reporting a combined first-quarter revenue of approximately $430.6 billion. The cloud services sector, encompassing AWS, Google Cloud, and Microsoft Intelligent Cloud, was a significant contributor, generating $92.3 billion in revenue, marking a substantial 35% year-over-year increase, signaling strong demand for cloud infrastructure. However, regulatory headwinds persist. Oz and Microsoft's high market share in the UK continues to draw scrutiny regarding antitrust concerns. Regarding Microsoft, its probability of becoming the largest company by December 2026 appears unaffected by the recent earnings report. Market interpretation suggests that Alphabet's cloud growth is having a high impact on its stock performance, while Meta's CapEx adjustments offer moderate support. Analysts advise monitoring further developments, specifically regulatory actions by the UK Competition and Markets Authority concerning Oz and Microsoft, and any shifts in geopolitical conditions impacting Meta's infrastructure investments. The broader tech sector's reaction to these earnings reports will continue to shape market direction.